Hello everyone. So in this video we are going to talk about yet another circular which has come out of this 50th GST Council meeting related recommendations. So today we are going to talk about very interesting circular on interest, right? So interest related computation, there has been a clarification which has been given. So let me first explain you how the video is going to be. So we start with the basics, we start with the fundamentals on what is interest and how the interest has got evolved in GST law, what are all the retrospective amendments and where we stand today, how they introduced the rule related to this interest, and what is the manner in which the interest has to be calculated, and what are all the issues relating to it which has led to a circular to be issued by the CBIC. So we also discuss about what is there in the circular, and we also discuss about what is not yet covered in the circular, what are all the open matters which are still not being covered in the circular, and then we also go on to address certain other issues as well, right? So on those lines, if you think you are very clear about the fundamentals, you can probably skip those chapters and you can directly move on to the other chapters relating to the circular or the related issues and other matters that we have discussed. So we have split this video into a chapter wise so that it becomes easy, because it's a very lengthy video. We have split it chapter wise for the ease of understanding from the viewer's perspective, right? So with this we'll get on to the content, right? So interest in any law is very important, especially the tax law, because interest is more like a deterrent factor. Unless there is a provision relating to interest, there will not be any reason for why a taxpayer has to pay the taxes in a time disciplined manner, right? So whenever there is any delay in payment of any taxes, naturally there should be an interest element which is compensatory in nature for the finance cost, right? So similarly, in GST law as well, we have interest, and as we stand today in GST law, interest is only at 18%. There is nothing called as 24%. It was only a wrong understanding. From the day one, it has always been 18%, and that has also been clearly amended by way of a lot of retrospective amendments as well, right? So this is point number one. Point number two is that when we talk about interest, section 50 is the governing provision as far as the GST law is concerned. CGST Act section 50. Section 50 has been amended a couple of times to accommodate some of the changes. In fact, for the first change was that whether interest has to be calculated on cash basis or on gross basis, which means should I calculate it on the gross or net. That position has been already settled, that it should be only on the net basis, that is after reducing ITC, what is the component that we are paying by way of cash, only on that interest has to be calculated. This is one such retrospective amendment. Similarly, a very important retrospective amendment in interest is that with effect from 1st July 2017, they have made this change that as far as this interest calculation is concerned, on the reversal of ITC, wherever ITC has been wrongly utilized and then the same has been reversed, then the interest has to be calculated not on the wrong availment, but rather only to the extent of the utilization. So, if there is an availment and if the availment is never being utilized, it is just kept parked in the electronic credit ledger balance, which means it has not been utilized. To that extent, don't even calculate the interest, because there is no loss to the exchequer, because the wrongly availed ITC is only staying idle in the electronic credit ledger balance. Unless that is being utilized towards the payment of output tax liability, there is no necessity for calculation of interest or payment of interest. So this in fact was a point which has been already settled in a Patna High Court decision in the case of Commercial Steel Engineering Corporation way back in 2019 itself, wherein they have clarified a very similar position. And then after the decision, with a lot of representations, the government has also come up with a retrospective amendment in section 50 subsection 3 to make suitable changes to mean that ITC reversal, as far as the ITC reversal is concerned, interest shall be calculated only based on the utilization and not based on the mere availment, which means as long as the credit is lying idle, unutilized in the electronic credit ledger balance, there is no reason for why the taxpayer has to pay interest on this. So this position has been settled by way of section 50 subsection 3. And then what happens is that last year, that is July 2022, they also brought first time the manner of calculation of interest in Rule 88B. In fact, though the Act prescribed how, the prescribed provisions relating to interest in Section 50, the rule has failed in terms of how the interest has to be calculated because there was no rule which has been originally prescribed in the law, right? So only with effect from this July 2022, only in July 22 with retrospective effect from 1st July 2017, they have introduced this rule 88B, right? So this rule 88B, again we are going to focus more on the sub rule 3, which is going to discuss about the interest calculation in the case of ITC reversal, which has been wrongly availed, right? So the rule is aligned with the Act in the sense that the interest has to be calculated only on the utilization and not on the mere availment. And the rule also very clearly says the manner in which the interest has to be calculated. There are two major aspects which they have clearly prescribed in the rule. Point number one, when we say utilization, how do I measure the utilization? What is the extent of utilization? What is the quantum of utilization? That has been clearly spelled out. Point number two, what is the date from which the utilization has to be calculated? So naturally, the interest when it comes to ITC wrong availment and utilization and then the subsequent reversal is concerned, which means there are three incidents which is happening. First, wrong availment, and then the wrongly availed ITC has been utilized, and then that has been reversed. You identify at a point of time and then you reverse it, right? So from the date of availment till the date of utilization, there is no need of interest because it was only lying in the credit ledger balance. And only from the date of utilization till the date on which the reversal happens, whether you call it in the form of reversal or in the form of payment of cash, the reversal actually takes place. Only at that point of time, the interest has to stop calculated, right? So on these lines, they have clarified two things in the rule. Point number one, what is the amount or the extent of utilization? Let's understand it with some example, okay? Let us say the ITC has been availed in a particular month 1 for 1 lakh. Out of this 1 lakh, 50,000 has been utilized in the same month and then they are ending up with a closing credit ledger balance of 50,000. But what happens, this 1 lakh also includes 20,000 of wrong availment. So let us say ineligible credit has been availed for 20,000. So even though 20,000 was wrongly availed, considering that the balance in electronic credit ledger is 50,000, I don't need to calculate interest on this 20,000 because to that extent it has not yet been utilized, which means my credit ledger balance is still maintained at or above this 20,000, which is right now at 50,000. The next month what happens, this 50,000 drops down to 30,000. When the next month return is filed with ITC as well as the output, this 50,000 drops down to 30,000 in the electronic credit ledger balance. So even at that point of time also we don't need to calculate the interest because it is still at 30,000 as compared to my wrong availment which is only 20,000. And then what happens next month, from 30,000 it drops down to 10,000. Only at that point of time the interest gets, the interest calculation starts. So the date of utilization here is the date on which the balance reduces from 20,000 to 10,000, right? And the quantum or the extent of utilization is the difference of 10,000 rupees, right? And again, when it comes to the date of utilization, they are also saying that if the utilization happens through return filing, then if the return filing happens on or before the due date, then you take the actual date of return filing. But if the return filing, let us say it happens only on 22nd, right? Whereas the date of filing 3B is 20th, right? So in that case, you have to calculate it from 20th because you should have filed your return only on 20th. So the interest also would have, as in the credit also would have got utilized on 20th. Merely because there is a delay of 2 days, there is a delay in utilization. So to that extent also the interest has to be calculated. So if there is any delay in filing the return, go back to the date on which the return should have been filed, the due date, right? So that is also clearly prescribed on the date of utilization. Then what happens, we stopped at 10,000 and then the balance further it drops down to 5,000 in the next month. So again there is a further utilization of 5,000 rupees. So on that we have to calculate the interest. And then from 5,000 it is again moving back to 40,000. Here it doesn't really matter. Once it is utilized forever, which means there is a short payment of cash which happens at that point of time. So just because there is a further accrual of ITC out of subsequent availment, it doesn't mean your utilization stops. No. Once it has been utilized, it is utilized forever. So now that it has come back to 40,000, and then one fine day we realize that, that originally the 20,000 was a wrong availment. And then after the realization, you are going on to the reversal. So at that point of time, when the reversal happens, at that point of time, the interest also stops. So the interest accrues starting from the date of utilization till the date on which the reversal actually happens. Here you can make the reversal of 20,000 using the 40,000. That is not a problem. But when you make the reversal, the interest should still be calculated from the day it has dropped to from 20,000 to 10,000. That has to be calculated. That is one utilization. And there is this next utilization when it has dropped down further to 5,000. And then it has to be calculated till the date on which the reversal actually happens. So this is how the interest calculation has to be made when it comes to wrong availment of ITC which has been subsequently reversed with or without utilization. So this has been beautifully given in the rule. But now coming to the issue, what is the, though the rule has been clearly stipulated on these manners, what is not clearly spelled out is that, now when I say what is the extent of utilization, should I look into headwise tax or should I look into the cumulative tax? Which means, should I see IGST separately, CGST separately and SGST separately? Let us say I have a shortfall of, I have excess wrong availment in IGST. Now, when I compare with the electronic credit ledger balance, should I see what is the total credit ledger balance or should I compare it only with what is the balance in IGST? So, same way, when there is a excess availment in CGST, should I compare it only with CGST or should I take the total amount? So, on these lines, there was no clarity in the rule. So, naturally, when there is no clarity, what happens is that the tax officers will consider that it should be looked at headwise, right? Whereas from the taxpayer's perspective, it would be looked at as cumulatively. So on these lines, there are disputes which have been there. So let's, before we further understand to what extent this circular is trying to clarify this dispute, let's also understand this set of procedure, right? So in GST law, we have this set of procedure or what we call as the order of utilization. So let's not get deeper into the order of utilization, but let me give you the perspective to the limited extent of understanding what is the issue when it comes to this interest calculation. So mainly it is governed under three provisions: section 49, section 49A and section 49B, right? Again, the major conditions which are prescribed when it comes to this order of utilization is point number 1. First, you need to exhaust IGST credit. So IGST credit has to be fully exhausted. The same way, when it comes to IGST tax output payment, it can be made out of IGST credit, CGST credit and SGST credit, right? So another important point which is prescribed in this order of utilization is that when it comes to this sequence of utilizing CGST and SGST for IGST output tax payment, only after completely exhausting the CGST related ITC, you can go on to utilize the SGST related, state related ITC, right? So it's basically like, they want to make sure that the central government, state government revenue is not getting disturbed. So that's a simple point here, okay? So the IGST output tax can be paid out of CGST and SGST, but you have to first completely exhaust the CGST before you go and disturb the SGST related balance, the SGST related ITC. So this is another condition, and obviously one important condition is that there is no cross utilization possibility. That is, CGST cannot be used for SGST and SGST related credit cannot be used for CGST related output tax liability. So with this in the background, let's come back to understand what is it given in this circular. So circular 192 has been given. So there are two important points which circular 192 is clarifying. Point number 1, when it comes to IGST, right? So IGST, let us say you have a wrong utilization wrong availment of ITC under IGST head. And then you realize at a point and then you make the reversal. Right now, the question here is, should I compare it with the credit ledger balance which is maintained in only IGST head or IGST, CGST, SGST cumulative balance? What is that I should be looking at? So here the circular says that naturally your output tax liability in terms of IGST can be met out of any of these three heads. So on those lines, you don't need to see IGST versus IGST. When it comes to wrong availment of IGST, please do compare it with the overall credit of IGST, CGST and SGST, and you need not compare it only with IGST. So to this extent, the circular is making it very clear, which is a welcoming clarification which the circular has given. The clarification number 2, which the circular is giving, is that when it comes to compensation cess. So compensation cess is naturally something which is given, which is collected for the purpose of compensating the revenue loss to the state governments due to introduction of GST law, right? So on those lines, it's very clear that when it comes to the compensation cess, whatever credit that is availed in compensation cess can be utilized only towards payment of compensation cess related output taxes. So on those lines, obviously when it comes to this excess utilization and excess availment and then subsequent utilization and then followed by interest, you cannot compare it with other heads. Stick to only compensation cess related head. So this is obviously a clarification which is aligned with what is provided in the law. That's fine. Now let us understand what is the issue which is still not being addressed by the circular. So till this we have understood what is there in the circular. Now coming to the issue which is missing or missed to be addressed in the circular. So recollecting what I explained to you in the set of procedure. So there is a possibility that your CGST balance will be much lesser as compared to the SGST balance. Now let's see what is the purpose behind. Ultimately the output tax remains the same, right? So whether you pay 5% or 12, 18, 28, whatever be it, it's going to be equally divided between CGST and SGST. So the output tax is also equal and the input credit is also equal between CGST and SGST. But because of all these offsetting procedure, there is still a possibility that your CGST balance could be much lesser as compared to your SGST balance. So this parity is not a fault of the taxpayer, but it is only because of some of the set of procedure which has been prescribed in a law, of course in a federal structure. So this is one thing. Obviously the other aspect which is also possible is the tran credit. In fact, very recently only the tran credit special window was also opened based on the Supreme Court decision. So on those lines, the CGST or SGST or IGST related transition credit would have been taken. Let's understand, see, transition credit is nothing but the credit which the taxpayer is eligible, right? It's a vested right of the taxpayer under the legacy law. But merely because the legacy law has been abolished and that has been brought into a single tax called as GST law, the taxpayer should not be deprived of the credit which is otherwise eligible in the old law. So there is a transition mechanism which has been prescribed. And again, only because of a federal structure, there is a differentiation of where you need to avail it. Should I take it through IGST or CGST or SGST? But ultimately, it is a credit which has been transitioned from the previous law. But because you say that it has to be carried only through CGST or only through SGST, there is again a difference. There is again a parity between the balance between CGST and SGST. So on those lines, all these differences are only because of the federal structure in which the GST law is functioning. But let's understand one thing. As far as the GST law is concerned, it is one nation, one tax. In the true spirit of one nation, one tax, there is only one tax which is GST. Now the GST has been split into IGST, CGST, SGST only because of the federal structure of revenue sharing between the central government and state government. And ultimately from the taxpayer's perspective, whether he has paid the tax liability or not, whether there is an excess availment of ITC, whether that has been reversed subsequently or not. At the time of reversal, whether it has been already utilized or not. Only these has to be the parameters. And one should not get into seeing whether it is in SGST or CGST or IGST, right? Ultimately, it is only GST. So in the true spirit of GST being one nation, one tax, creating a difference based on the head of taxes is definitely not right. In fact, a similar understanding is what has been prescribed even in section 77. So a bit of deviation, section 77 is not on the ITC, it is more on the output taxes. So when the output tax has to be paid, and if there is a mistake in the place of supply, so which means instead of paying IGST, if I have paid CGST, SGST or vice versa, I have to pay the correct tax and take refund of the wrong tax. And the section very clearly says that you don't need to pay any interest at all. There is no interest compensation here because the tax has been originally paid. It is just that it has been paid under a wrong head. So on those lines, there is no need of interest. If one has to understand section 77 in the true spirit of law, then obviously a similar understanding should be extended even when it comes to reversal of ITC as well. There is no point in differentiating whether it is under CGST or SGST or IGST. It's ultimately one nation, one tax. So interest cannot be calculated on headwise basis. Interest should be on cumulative basis. So this is my view. So please do drop in your views and your thoughts and ideas on these lines in the comment section as well. But before we wind up this particular video, I also want to touch upon one important point. Let us say if a taxpayer has already paid excess interest. Excess interest could have been because of paying at 24% instead of 18%, paying interest based on availment instead of considering what is there in the utilization because everything has been brought only as retrospective amendment. Or there can be cases where headwise interest might have been calculated, especially when it comes to IGST, but now the circular says you don't need to calculate it headwise. So for whatever reason, there may be instances where the taxpayer might have paid excess interest. On those lines, please do make sure that you go and seek for refund because when it comes to wrong payment of interest, it is no more a color of interest. It is a mere amount deposited without authority of law. So which means it has to be mandatorily given back by the government. But the government will not come step forward to understand where you have paid something in excess. It is the responsibility of the taxpayer to go and seek this refund from the government, and then it is the responsibility of the government to sanction the refund and to return the money which they have collected without authority of law. On these lines, we do have a lot of case decisions, including a very recent GST case decision in the Gujarat High Court. So probably we'll discuss on this in a different video. So one important point here is if at all there is any excess interest which has been already paid, please do make sure that the refund is being applied on those lines. And just in case if you are already disputing on this interest related matters, this kind of circular is probably going to strengthen your dispute. Maybe it is at show cause notice level, or it is at the order might have been passed, or you are at a appeal level. So whatever be the level at which the litigation is, please do make sure that this kind of circular clarification is also being made use of to get sufficient relief as well. So hope you like this video. Please do share your feedback in the comments and stay tuned for more videos from GST with Saradha.